Hello, people. A very good evening to all of you. So, guys, finally, here we begin with our next new web series, which is company accounts. So, guys, this web series would comprise of totally 3 seasons, I would say, or 3 chapters, right? So, the first chapter being accounting for share capital. Second is accounting for issue of debentures. And the last one is accounting for redemption of debentures. Fortunately or unfortunately, the third topic has been omitted from your academic year. So in the board examination perspective, you will not get any question from this topic. And as long as the CA Foundation students are concerned, the third topic is anyways not there in a syllabus right from beginning. So for both these people, that is both 12 CBSE people and the CA Foundation students, will be concentrating on the first 2 topics. So before we head, towards discussing the chapter, let's quickly go through that from examination point of view, more specifically from the 12th board examination point of view. This particular, chapter carries what weightage of marks. So guys, for 12th CBSE people, for your board examination or from the board examination point of view, accounting for companies, which is both accounting for share capital and accounting for issue of debentures, both put together, you will be getting questions for nearly about 24 marks, which is quite big. 2 chapters put together, 24 marks. Easily gettable. Okay? So this is for 12 CBSE people. Now, CA Foundation students. Look at this, man. From May 2018 to June 22, there has not been a single attempt where the question from this particular chapter is not being asked for. So May 2018, guys, we had a question for 10 marks, straight 10 marks. November 2018, you can see 10 plus 5. 10 mark question was for issue of share capital, accounting for issue of share capital, and 5 marks was accounting for issue of debentures. Again, May 2019, 10 plus 5. So 10 again is for issue of share capital, 5 is for issue of debentures. November 19, you got 15 marks from this chapter, straight 15 marks from the issue of share capital chapter. 15 mark, one single question. December 2020, 10 plus 5, which means 1 issue of share capital, another is issue of debentures. Then if you see consecutively, 4 questions they've asked, 15 marks straight from accounting for issue of share capital. So there has not been a single attempt where the question from this chapter has not been asked for. Apart from that, in true and false, there has been additional questions asked for 2 marks. So this is the analysis. May 2018, if you could see here, question number 4, company account shares are put in brackets. So it is accounting for issue of share capital for 10 marks. November 2018, if you can see here, company account shares 10 marks, company accounts debentures 5 marks. Right? If you see May 2019 examination, again 10 marks for issue of share capital, 10 marks for debentures. November 2019, guys, you can see company accounts only shares for 15 marks, straight 15 marks. Big question. November 2020, company accounts shares 10 marks, company accounts debentures 5 marks. Jan 2021, and like that, it is being given. Am I clear? So from the examination point of view, I suppose both 12 CBSE people and the CA Foundation people, you should be clear that this has got umpteen amount of weightage from your examination point of view. So no compromise, no skipping on any part from this particular chapter. So CA Foundation students, apart from this 10 mark and 5 mark question, there are here and there 1 questions at least minimum true and false from this particular series. So you have to be very careful with the theory part. Theory is very, very important. So company accounts. In that, the first chapter that we're going to study is accounting for issue of share capital. So what are you going to study in this particular chapter, guys? I'm not going to read. There's a whole lot of lists that has been given. I'm just going to discuss few things today. Today, you'll understand what is the meaning of a company. What are the features of a company? And then you're understanding difference between partnership and the company. Company is called as a joint stock company. So what is the difference between partnership, and the company. These two you'll study, and rest of the things you'll be studying one by one. So again, from 12 CBSE point of view, also theory is equally important for your MCQ related questions, for your case-based studies, for your assertion-based questions. So this is very, very important. So no skipping out theory, guys. Initial 3 classes, we might take minimum only for completing theory. You'll get a lot of information. Theory could be dry, but you'll have a lot of information. So if you have a lot of excitement to know about companies, if you want to become an entrepreneur in future, if you want to learn a lot about companies, how the companies function, what are ifs and buts with the company, if you want to really get that insights, I'll be giving you all those insights in that, which you will not get this anywhere from anyone. So remember, when we started doing NPO, or even when we did partnership, I told you that in India, business has to be done, or business is being carried out in multiple forms. There are different kinds of entity, types of organizations, that is being formed. The first one being a sole proprietorship concern. A sole proprietorship concern is, a business type where there is a single person who's got the thought of, starting a business. He's the person who's, investing capital inside the business. He's the person who single-handedly manages the entire business. He's the person finally who will reap the entire profit. Right? So I can say this is a pure one-man show. Right? So that is basically your sole proprietorship concern, where we have understood about this in detail, and we did the accounting also for the same in the 11th standard. Am I right? Then this sole proprietorship concern, guys, suffers with certain limitation. See, as a single person, to what extent can I contribute capital? I'll have a limitation, right? I can invest, let's suppose 10 lakh in a business, 20 lakh, 50 lakh, 1 crore. Somewhere that limit will get, freezed, right? So let's suppose I have a business model where I want to expand it further, but I'm running short of capital. So I would be needing more, persons to come and join hands. In that case, I would think about, taking some person as a partner who would share the responsibilities equally, who would share the risk and the reward equally. Now you may ask, sir, why do you, split your ownership, or why do you give away your ownership? Why can't you, hire some person who can do the job for you? Definitely that is possible. But again, please understand, if I hire an employee, would not take care of, the organization the way the owner might take. Definitely there are very good employees. If you take care of your employees, definitely employees will in turn take care. But the kind of accountability, the responsibility, what the owners would take, can I say 1 point less than that always will be employed. So definitely, if I'm looking forward for someone who would, take the equal responsibility, equal accountability, equal, in every perspective, if something equal has to be done, then it is the owner who can give that, help to me. That's when people go up to looking for another, partner who can, come and invest in the business, so that capital can be, contributed by, one or more people, right? Then management, one single person doing everywhere is not possible, right? So let's suppose I want to have branches all over India. As a single person, do you think it is possible to manage? Maybe I can take care of South India, but I need a partner who could take care of North India, West side, East side. So management, if you want to, get the, support, somebody should come and take the ownership of managing, then probably you need to take a equal partner. So like that, there are certain limitation in the sole proprietorship concern, because of which people look up to, starting a partnership concern. So partnership we have dealt with in detail. We have just completed the partnership series. So partnership again is where a place 2 or more people come together, join hands, with the motive to do business together, to manage the business together, and to share the profits accordingly. Having said that, even partnership suffers with certain limitation, because of which people look up to limited liability partnership concern. So after partnership, you have something called as LLP, which is also partnership. Now, what is the difference? One item is the difference between the two from the perspective of liability. All of you know that partnership suffers with unlimited liability. What do you mean by unlimited liability? If the business is not having sufficient assets to pay to pay the business liabilities, then those business liability holders can attack the private assets, the private properties of the owners. We have studied this point exclusively looking at few practical examples in the dissolution chapter. You remember? We studied that, we saw with practical examples. If the assets of the organization or the business is not sufficiently available to pay the liabilities, these liability holders will go and attack your private assets. So this is one of the biggest risks, because of which people might not prefer partnership, and in place of that they might prefer forming an LLP. LLP from accounting point of view, we have nothing in your 12th CBSE. Maybe theoretically you may have in your business studies entrepreneurship, I believe. Entrepreneurship, yeah. And again, from the CA foundation point of view, accounting for LLP we don't have. That is there in your CA intermediate level. And you might have studied LLP in your law, right? So limited liability partnership is also a kind of partnership where everything is, same, pretty much same. Just one, if I have to tell you the difference between the two, is from the perspective of liability. So here, Indian Partnership Act, guys, 1932 is government 1932 Act. It has got unlimited liability. Whereas limited liability partnership, look at the name itself. Name itself says that this is limited liability. Limited liability means what? If the assets of the organizations are not sufficient to pay the debts of the organization, these debt holders cannot attack your private properties, except in the case of lifting up the corporate veil. Lifting up of corporate veil is a concept that you'll study in your higher grades, that is in the professional courses. That is one scenario when, even being a limited liability partnership, your private properties could be exposed. But that is not that easy. So that has got a lot of pros and cons to it, a lot of terms and conditions, ifs and buts attached to it. But otherwise, if you can say 99%, LLP is safe compared to your partnership, right? Now guys, both in LLP and partnership, there is again a constraint. What is the constraint? The maximum number of partners that you can have in a partnership concern is 50, which means more than 50 I cannot even take partners. I cannot take the business owners more than 50. So now let's suppose I want to do a construction of apartments. Let's suppose I want to build 300 apartments, which is requiring let's suppose I want to make 1,000 apartments. 1,000 apartments, let's suppose on an average for making each apartment, the cost is 1 crore. 1 crore per apartment for constructing it. I want to make 1,000 apartments. How much capital is required? 1,000 crores is required. Is it possible to be contributed by 50 people? In that case, you might need 100 people. You might need 500 people. It can go in any numbers. So now there are certain businesses where 50 owners are not sufficient. You need 50 owners, more than 50 owners. That's when the concept of company has been introduced. Here, you can have more than 50, owners. If you want to have 60 owners, 100 owners, 150 owners, 200 owners, unlimited owners, options are available in the companies, right? So companies, another form. So since LLP and partnership suffers with certain inherent limitation, to overcome that limitation, the concept of the company is being designed, where you have more flexibility to expand the business, right? So more people, more capital, more people, more management, right? So a lot of benefits are there with companies. So then we have NPOs, you have other forms of organization in which you can do the business. So company, guys, is one of the form of doing the business in India, and which is very predominantly being run in this entire country. So understanding how this company law works, understanding how this company accounting work is very important for a commerce students. So comfortable, can we go forward? NPO, last is NPO. NPO is something which you already studied. This is the first chapter that we studied. Fortunately or unfortunately, this got deleted from your board examination, 12th board examination. So NPO is an organization where you do the business and the motive is not profit. The motive is not profit. So if you see the above organizations, whereas sole proprietorship concern, partnership, company, all are profit-making organizations. Whereas NPO is a an organization where you can create a trust or a society where the motive is to do services or sell the goods for the welfare of that community or society. So here business happens, but the motive is not to share the profit. The profit is again reinvested in the business, and the word that we understood is not profit. That is the word surplus there that we use, right? So NPO is one of the kind of forms in which you can carry out the functions in the country of doing business, but the motive is not profit. The motive is service. Trust, you can form a trust. So trust is coming under the concept of NPO. Creation of the society. The apartments have the societies, right? So they come under the concept of NPO. Am I clear? Yeah. So this is it. I'm not going too much in detail. So let's come back to our topic, guys. So in this topic now, we have to learn what is the meaning and the definition of a company. It says that a company, which is also called as a joint stock company. Another name for company is joint stock company. We don't use this word frequently now. Earlier, used to use this word joint stock company. It was very famous back then. A company is an association of a person formed and registered under the Companies Act. Now, guys, first we have to understand what is association of person. Association of person means what? A company is an organization where two or more people come together with a mindset to do business. So, two or three people coming together is an association, right? It is an association, means gathering of the people. So this company is an association of persons. First point. Formed and registered. Now, what is the meaning of registration? Here, registration means registering the company with the government. In sole proprietorship concern, when we studied the concept of sole proprietor, did we learn anywhere that the sole proprietor needs to be registered anywhere with the government? Online people? Anywhere did we learn that a sole proprietorship business needs to be registered?
No, sir.
There's no asset registration required. Of course, PAN number is required. Other registrations are all required. To register the business or the business name, it is not mandatory. For example, Fortune's Fund Learning Academy. It's a sole proprietorship concern, let's suppose. There's no need as such for anyone to register this brand anywhere. There's no compulsion that I have to be registered with the government. Partnership, guys. When we started partnership, is there any requirement for the partnership to be registered?
May or may not, sir.
It is may or may not. In the partnership, if you recollect, when we did the fundamentals, we said that it is compulsory to have agreement. Agreement can be either in written or in oral, but agreement has to be there. Agreement has to be there. But if it is in writing, then it's a partnership deal. If it is oral, it's agreeable. But there's no compulsion to register. The compulsion was there to create the agreement. So agreement is mandatory. Registration with government is not mandatory for partnership. But here, a company will not come into existence. A company will not come into existence unless and until it is registered with the government. Registered under the Companies Act. Through the Companies Act. So Companies Act will tell you the process. Through the Companies Act, you will register this with the government. Companies Act is being governed by MCA. Do you know what is MCA? Ministry of Corporate Affairs. Under MCA, there is Companies Act. What is Companies Act? Companies Act is a rule book. It's a rule book that every company needs to follow the rules and regulations that has been mentioned in that act. Act is basically a rule book. We are governed by so many acts. No? We are now in this premises, right? This premises is governed by the rules and regulations of this particular association or society. The moment you step out on the road, if you go, you have to follow the rules of traffic. Correct, no? Once you step into your house, there's a rules that is being framed by your parents, which you need to follow. So everywhere you go around, guys, you are surrounded by rules and regulations. In the same way, a company, for a person to run a company also, there's a rules and regulations that needs to be followed. And where do you get those rules and regulations? Where do you get to study those rules and regulations? In the Companies Act. So there's a book called as Companies Act. So you take a rule book and go through. Who has created this Companies Act? MCA, Ministry of Corporate Affairs, which is a government body. MCA it's one of the government body. Online people, any difficulty so far in understanding this?
No, sir.
No, sir.
Okay. Full stop. Next point. It is a legal person. It is a legal person not having physical existence and as a separate legal entity. It is a legal person, which means that calling company as a person. Which person is the company? Natural person or artificial person?
Artificial.
We came across this artificial person somewhere once upon a time. Where was this?
In personal accounts, sir.
Yes, golden rule. Rules of debit and credit. Golden rule, traditional approach, where we learned that accounting, rules has been classified in three categories: personal, real, and nominal. Personal had got three sub-classifications: natural personal account, artificial
personal account,
and
and
personal. So personal account said that there is somebody called as artificial personal account. So why did we learn artificial personal account? Because of this rule. The Companies Act said that a company who's registered with me, we will treat him as a legal person. Can he be a natural person? Because natural person is a result of God. It's a God gifted thing. Company is not born out of that process. So definitely it is a artificial person. Now, why do we call it as a person? You'll understand once we go forward. It is a legal person. It is a legal person. Artificial person is getting legality. It is getting its legality from law. It is a legal person not having any physical existence. For companies, can you say it's got a physical existence as we have? We all have physical existence. Can you see company physically anywhere? It is just there on the board, on the visiting cards, on the banners. So it does not have any physical existence, but has a separate legal entity. That is, it is an artificial person separate from its members, which means once the company is born, the company is different and the owners are different. The company is different, the owners are different. This concept is similar to one concept what we studied again back in 11th. Separate and legal entity concept is similar to, it's sounding similar to
Business entity.
business entity concept or accounting entity concept, which says that while we do accounting, you have to treat business separately, you have to treat owners separately. Accounting is done from whose point of view? From business point of view. So to set that viewpoint properly, the separation, the segregation was important. Here also the same point, but in a polished language. Here they're not using the word business entity concept or accounting entity. Here they are using in a polished manner, like separate legal entity, which says that this company is different from its owner. Owner is member is shareholder. What is owner? What is member? What is shareholder? We'll discuss. So one thing is very clear. So when we do accounting here, from whose perspective we do the accounting? Company's point of view, not from the owner's point of view. It normally has a share capital divided into units called shares. Now, a lot of people, have a lot of curiosity. So what is shares? Who are shareholders? What do you mean by members? So let's quickly have a look at it. Can you see this colorful picture? Yes.
Yes.
So what can you see here, guys? What can you see here? If I look at the first pic, there is a box where money has been collected. Let me change the color. Yeah. This box where money has been collected, and this money has been collected from various people. 1, 2, 3, 4, 5. So what are they trying to do, guys? What is this box? This box is company. And what are they doing, guys? They're investing money in that company. They're investing money in that company. In return, what do they get? They get
interest.
They get shares. Now, what is the meaning of a share? Can you tell me? In a layman language point of view, what is the meaning of share? Okay, share, ownership, part of
ownership.
Layman point of view, a simple language, simple language. Share means what? What shares means what? Like in simple language. One said ownership. Second, you said part of a company. Okay, others. Shares means what? If you literally go with the word, what do you think that share would mean?
Share of capital.
Sorry?
Share of capital.
Share of capital. Okay. Or else, what else can you say? You're very close. One more point you can add to that, Shiva.
Share of profit.
Who's that?
Sai, sir.
Sai. Sai, you've seen my video? Last year's video?
Sir, no, sir.
Share of profit. Share is nothing but, guys, share of profit. We have studied this concept in the partnership. Correct? No? So share here means share of profit. And or you can say share of capital. Sharing of capital. Share here represents two things. One is sharing of profit. Second is sharing of capital. Because obviously one person cannot put in all the capital. So the capital has been shared by multiple people. So share of profit. Now, let's suppose we need 100 crore of rupees. We need 100 crore of rupees. Let's suppose to construct apartment. Let's suppose we are constructing a twin tower. Which is an of late trend, right? Hope this doesn't get demolished. Okay, so let's suppose for convenience sake, I'm just taking 5 people. Okay, we're taking 5 people. So this company is being formed with 5 people. So 5 of them are contributing capital depending on their availability of the capital. So I'm just breaking down into 5 parts. So this is A, B, C, D, E. A says that for this project I have 15 crore rupees capital available with me for investing purpose. Okay. B says that, boss, I will give around 25 crores. 25 plus 15?
40.
Tisha's like, 25 crores. C says that, sir, we have only 10 crores. Okay. So 40 plus 10 is 50.
50.
D says we have 30 crores. E says 20 crores. So can I say all this 5 put together, is it summing up to 100 crores? Now, which means what? 100 crore is my total capital of the company. This is the total capital of the company. This 100 crore total capital now will be shared between 5 different persons, which means what? The capital is being shared. The capital which is going to be shared among the owners, it is called as a share capital. The capital which is going to be shared among the multiple people is called as a share capital. The capital to be shared is called as a share capital. Clear with this point? What is a share capital? All of you online people, are you clear with the meaning of share capital?
Yes, sir.
Yes, sir.
Now, I told you that shares would comprise of 2 parts: sharing of capital, second is sharing of profit. Now, in partnership, what happened is there were 2 options. Whatever the capital you're contributing, you can share the profit in the ratio of the capital contributed. That is one option. In second case, if you don't want the share of profit in the partnership concerned to be equal to your share of capital, you can have your own. Share of profit. Let's suppose these are the capital contribution by 5 partners, but they can still choose to have equal distribution of profit. 1:1:1:1:1:1. Clear? So in partnership, we had 2 options, but here you cannot have a different profit sharing ratio because your profit sharing ratio is 100% linked to your capital contribution. So here, if I have to ask A, what is your share of profit in this particular company? Then A would say that 15 crore upon 100 crore into 100. 15% is my share of profit. In partnership, we discuss in terms of fraction. If let's suppose there are 4 partners, 1:1:1:1:1. Let's suppose 5 partners, 1:1. 5 partners. In terms of fraction, it is 1/5, 1/5, 1/5, 1/5. Correct? If I have to ask in terms of percentage, it'll be how much? 20%.
20%.
So there in partnership, we used to classify both in fraction and in percentage. But here in companies, we'll be discussing mostly in percentage. So 15% is the capital contributed by. So what is this 15%? This 15% is the capital contributed by the owner towards the share capital, towards the capital rather, I would say. And in future, whatever the profits he gets, that profit will be to the extent of only 15%. So his share of profit is 15%. So what is happening here? All these people, guys, are contributing the money, and in return, what they take their own share. So if you can see here, if I want this much part of the share of the company, I need to pay this much money. If I want to have this much part of the shares of the company, I need to pay that much money. Right? So it's basic, it's simple. If I have to stay in simple language, if you want to take a share in something, if you want to take a part of something, if you want to, contribute into something, for that you need to you need to give money. So this share, if you see, it is missing here. Why? Because you've taken the money and taken that share. You guys can better relate to this. Domino's Pizza, which is very difficult to share. Am I right? In Domino's, all the pizzas are of same size, is it? Sometimes big, sometimes small. So let's suppose 1, 2, 3, 4, 5, 6. 6 means medium size of pizza. Okay? So 6 friends are going. They have money constraint. Everybody's got small pocket money, but they want to have that pizza. They have cravings for pizza now. So what happens? So this pizza is, let's suppose, costing 600 rupees. So one option is all of them will take one slices and distribute equally. But that one person will be there who's having the small share. You will see, my pizza very small, your pizza very big. You and I are paying same. How is it possible? Then they'll start measuring. Okay. Since you're eating a large piece of portion, you don't pay 100, you pay 125. I'll pay 75. Rest all seems okay. So 100, 100, 100, 100. So what happens? This person gave the money depending on how much quantity he got. Bigger the quantity, bigger the money, bigger the share. So bigger the share. So this is the share of pizza what he got. Am I right? This is the entire pizza. He took one slice. That one slice is his share, which he will eat, right? For bigger share, he had paid this money. So don't you see this pizza? So this share, if you want, you have to pay so much money. Higher the profit, higher the share. In simple language. Any difficulty understanding this? So what do you understand by share? Share is nothing but sharing the capital. Share is nothing but sharing the profit. So here, if you look at the percentage wise, what is A? A is an owner. A is an owner to the extent of 15% in the company. So A is the owner with 15% ownership. I repeat the word. Isha, A is the owner to the tune of 15%. B is the owner to the tune of, because all base is 100, 25%. 25 divided by 100 into 100, 25%. So B is giving 25 crores, which is more than A. So he's getting comparatively share more than A. C's share is 10% in the business. Since he's contributing less capital, the share what he'll get also will be less. Obvious reason. D is contributing 30 crore, which is the highest. So he's getting 30% share. Higher the share contribution to the capital, higher will be the share of profit. Higher contribution to capital, higher will be the share of profit. And finally, for E, it is 20%. So at the end, all this put together should be equal to 100%. Because always share of capital or share of profit is out of 100% only. Percentage I'm talking about. I'm not talking about amount. This can be 1000 crore, 200 crore, it can be 2000 crore or 20,000 crore. But at the end, everything will be equal to 100%. Am I clear or not?
Yes.
Now coming back here, it normally has a share capital. So every company, like every business, has a capital. Here we don't use the word capital, we have share capital. So the company normally has a share capital. In our example, the share capital total is how much? 100 crore. This 100 crore is divided into smaller units called as shares. That's what it did now. So this 100 crore, guys, which are divided into multiple people. So this capital is divided into smaller parts. So 100 crore, smaller units is what? 15 crore, 25 crores. So these are the smaller parts. These parts are called as shares. Now tell me one thing. You gave, let's suppose I'm a company. You guys gave me 15 crore. And I tell you that you're owner of 15 crores. I mean, you're owner to the extent of 15%. Will you accept and go? Will you accept and go? Or will you demand anything in writing from me? Because anything in writing is valid. So in return, what do I give? See, you give me money. I give share. Along with share, I give you a share certificate. Because anything that is said orally, it is not acceptable. So you need to have some proof, evidence. So the evidence what we give to support this transaction is called as a share certificate. So you can look at this. I've taken a image of share certificate. So this is a share certificate of a company by name Shubh Shanti Service Limited. If you look at the content, this company was incorporated under Companies Act 1956. So the latest company law rule is 2013, which means in 2013, guys, this law, this rule book has been drastically changed. Before this 2013 rule book, the rule book that used to follow was Companies Act 1956, which means this rule was framed in 1956, though it was upgraded on time-to-time basis. But in 2013, the government felt that this 1956 rule is very, very old. It's outdated. It is for those olden people. Today, the scenario is changing. Today, a lot of technology is coming into picture. So if you still go with the old rule book, which is not even applicable for the current scenario, there's no point in having a rule book like that. So what they did is in 2013, there was a tremendous, huge change, very, very huge change that was brought into the Companies Act. So today, guys, we are governed by 2013 Companies Act 2013. So this company, Shubh Shanti Service Limited, what you're seeing on the screen, is a company which is registered in the previous act, which is 1956 Act. So here, if you see, this is a share certificate, which will tell this is to certify. I hope it is clearly visible to all of you.
Yes, sir.
It says that this is to certify that the person named in the certificate, the name of the person is here. What is it? Devi Kandan Tibrewala. So the person who's named in the certificate is the registered holder of so and so with it so and so distinctive number, like that. Whatever is being, what they're supposed to write in the share certificate, the content what it is supposed to be write, with that they've written it. So this is a proof that the person to whom the certificate has been given, is the holder of the certificate. He's entitled to so much number of shares, so many percentage of shares, etc., etc. Right? So if you see here, there is a distinct number, registered folio number. If you see here, registered folio number. So different, every share certificate have an individual number. Every certificate will have an individual number, identification number, name of the holder, number of shares what is holding, distinct number, etc. And finally, the share certificate is being signed by the director of the company. This is the common seal of the company. You can see there's a seal in the company, blue color seal. That is called as a common seal of the company, etc. Any difficulty understanding this? Folio number is absolutely created by the company. It has to be in a serial number. It's basically serial number. Now, here one thing that you have to understand. See here, when I'm saying that A is, contributing 15 crores of capital. So 15 crores of capital. I told you that this 100 crores is a total capital. The smaller unit is 15 crore. This is one perspective. Another perspective, when they say that share has been divided into smaller, units called as shares, means that this 100 crore capital, guys, this, when I'm giving you share now, it is in terms of 1 share, 2 share, 3 shares. That is, it is broken down into multiple shares. So what happens here is that 100 crore is the capital of the company. 100 crore is the capital of the company. Each share is being given a value. For example, if you go out there in the market to buy chocolate, can I say chocolate is for 1 rupee, 5 rupee, 10 rupee, 20 rupee, even 100 rupees. They don't give you the entire chocolate bar. That is also available, but they break down into smaller parts. Am I right or wrong? There are huge chocolate bars also available. Correct. But they broke down into smaller parts. See, 100 rupees Cadbury is broken down to 5 rupees. Why? Everybody would not want to buy for 100 rupees. They want to buy, smaller parts. So like that, this 100 crore total capital, guys, is being allocated into smaller units. How do we calculate those units? We divide by a particular value. It's called as a face value, 10 rupees. 10 rupees means what? This is the value of one share. So 100 crore rupees is the total capital. Divided by the face value, if you do, you will get what? Number of shares. You will get number of shares. So now tell me, guys, this company wants 100 crore rupees of capital and they have fixed each share price to be 10 rupees. Each share price to be 10 rupees. So now what is the number of shares the company is wanting to issue to the public or to the owners?
10 crores.
10 crore shares. 10 crore shares. So 10 crore shares are available. I'm talking about quantity. Like 10 crore chocolates, no? Like that, this is the quantity. Now, each share is valuing how much? 10 rupees. So in terms of, if I want to know, A is having how many shares, number of shares, can you tell me? 15 crore is the capital contributed. 15 crore divided by 10 rupees. So how many shares he has purchased? 1.5 crore shares. He has purchased 1.5 crore number of shares. For each share, he is willing to pay 10 rupees. So how much total money is contributed? 15 crore. So number of shares into face value is equal to capital. So A is buying 1.5 crores number of shares, quantity of shares. Each share is worth how much? 10 rupees. So how much did he pay? 15 crore. Now B is buying how much? 25 crore is his capital. He is willing to invest 25 crores into 10 rupees. So how much is this? 25 divided by 10, which means 2.5 crore. 2.45 crores quantity of shares is buying. So this number of shares is what is called as a smaller unit. Did we divide the capital like smaller units in the proprietorship concern or in partnership concern? No. Because there the amount of capital that is involved is comparatively less than this. Here the capital contribution is more. Here we need hundreds of owners. So that's why they're dividing this entire 100 crore capital into smaller parts, which is got 10 crore number of shares. 10 crore number of shares. So it's like each share is worth 10 rupees. So is it necessary that the face value always has to be 10? No. It can even be 1 rupee. It can be even 100 rupees. Depending on what quantity you want to have. Are you able to follow? Doesn't make a difference. If you take 100 crore divided by 100 rupees per share, divided by 100 rupees per share, then how many shares are you issuing? 1 crore quantity of shares. 1 crore quantity of shares. In that case, how much will A buy the shares? How much will A buy? A is anyways still wanting to spend 15 crores only. Now his share is 100 rupees per share. So how much shares will he buy? 15 crore divided by 100 if you do, you get 0.15 crore. Which means what? 0.15 crore is nothing but 15 lakh shares. 15 lakh shares. So what happened? If the face value is increasing, the number of quantity of shares will decrease. Are you able to follow? So in the previous case, he got how much shares? 1.5 crore shares. He is getting only 15 lakh shares. It's not different. Both are same. Because ultimately he's investing how much? 15 crores only now. Quantity is only varying. How does it matter? Doesn't matter. Am I clear or not clear? So if he's investing 150 crores, what is the face value? What is 100? So how much quantity of share? 150 divided by 100. 1.5 crores shares is buy. This is the formula, guys. This is the formula. Very simple. Number of shares you multiply with the face value, you get the capital. Which is nothing but, guys. See, simple. Look at this formula now. This is the total capital. That total capital, this total capital, you're dividing into smaller part number of shares. How did you get that? Capital divided by face value is equal to number of shares. So what did you do? This total capital, you divided by something into smaller units. That's what is mentioned here. It is normally a share capital divided into smaller units called as shares. So this 1.5 crores, whatever you're seeing here, 15 lakhs is called as shares. So price is fixed, 10 rupee per share. Now you decide how much capital you have. With that you decide, I want 10,000 shares. I want 20,000 shares. I want 40,000 shares. So if you want to buy 40,000, Dhiru wants to buy 40,000 shares. Each share is costing 10 rupees. So how much Dhiru has to pay? 4 lakh rupees. Am I clear? Let's suppose Vedant says that, sir, I want to buy 60,000 shares. Each share is 10 rupees. So how much Vedant will invest? 6 lakh rupees. Very simple. Am I clear? Online people, are you able to follow? Now,
Yes,
Abdul
sir.
says, sir,
Yes,
I
sir.
want to buy, 1 lakh shares. So 1 lakh quantity of shares he want to buy, and each share is costing 10 rupees. So how much will Abdul invest? 10 lakhs. Now it's like going and buying the product in the market. The price is fixed. Like that, here for the share, the price has been fixed by the company. Am I clear?
Sir,
Now-
so face value will be fixed by the company, no, sir?
Yeah, when the company is been created, no, that time you have to say that what face value your share you want to keep it. Whether you want to keep it 1 rupee, 2 rupee, 5 rupee, 10 rupee, 50 rupee, 100 rupee, 1,000 rupee. That you need to inform it to the government. So accordingly, it will be divided.
The sum of number of shares should be equal to the face value.
Not sum of number of shares. Sum of number of shares multiplied with the face value should be equal to the capital. Total number of shares
So can you just
multiply with total number of shares. Total shares everybody is holding, no? Multiply with the face value. If you do, will get what? Total capital of the company. Total shares, if you multiply with face value, you get total capital. Individual shares, if you multiply with face value, you get the individual capital. Yes.
So okay.
This 15 crore. 15 crores is total capital. If I want to know how much A has purchased a share, this 15 crore I'll divide with the face value.
For example, A is having 1.5.
A is investing 1.5 crore shares.
For B, 2.5.
B it is 2.5 crore share. Yes.
0.1.
And here it is 1. 10 crore divided by 10 is 1 crore shares. Like that, you keep on going. Huh?
3. Okay.
Then 3 crore shares. Then here it is 2 crore shares.
What is this?
So 1.5 plus 2.5, 1. How much is this equal to? So 100 crore rupees is the total capital. Divided by 10 will be 10 crore. So this will be 10 crore. So all the shares individually put together, if you add, it will become the total shares of the entire company. What is the total share of entire company? See, 100 crore rupees is the total capital. Divide by 10 rupee per share. So you're getting 10 crore shares. So which means 10 crore shares available by the company to give you. So if you add all this, 1.5 plus 2.5 plus 1 plus 3 plus 2, you'll get 10 crore. Always it will match mathematically. Am I clear? Now, in the sole proprietorship concern, the owner is called as a owner. The person who contributes capital is called as a owner. In a partnership concern, the person who contributes capital is called as a. Online people are waiting for responses. In a sole proprietorship concern, the person who invests the money is called as a sole proprietor or sole owner. In the partnership business, the person who invests the capital is called as a partner. In a company, the person who is investing the capital is called as a
Shareholder.
member or shareholder. Shareholder, as the name goes, the person who's holding the share is called as a shareholder. Shareholder is alternatively. I told we Indians are obsessed with multiple names. We can't have one name. We want more than one name. So another name for shareholder is a member. So the owners of which are known as members or shareholders. Insolvency or death of a member does not affect the continuity of the company. That is, the company continues even if the member becomes insolvent or die. The last line what I discussed, guys, the insolvency or the death of a member or the shareholder does not affect the continuity of the business. This feature is called as a perpetual succession, which we'll be discussing now very shortly. I'll be discussing about perpetual succession here. So keep that point on hold, guys. I'll go forward discussing this company definition, guys. Definition given by section 2 subsection 20 of the Companies Act 2013, which says that company means a company incorporated under this act. This act means what? The Companies Act 2013 or any company, any previous company law or any previous company law. You cannot say that any company was registered from 2013 onwards is only company. Arey Baba, there are certain companies which are there for 100 years. So they all have been registered in the previous act, 1956 Act. So anybody who's registered in currently in the 2013 Rule Book Act or in any of the previous acts, 1956 or previous to 1956, everybody is a company. In one shot, they're finished. Very simple. A company means a company incorporated. Incorporated means, please put a mark here, registered. A company means company registered. In company, registration is mandatory. Registration with MCA, which is a part of government. So companies means companies incorporated under this act. This act means 2013 Act or any previous company law, which means 1956 company law and previous to that. Very simple. Professor Haney has said that a company is an artificial person created by law. So company is artificial person. Who has created this artificial person? Law. Having a separate legal entity. Separate legal entity means what? When you do accounting, you have to do from the company point of view, not from the member point of view. So therefore, to have that perspective clear, the segregation was very important. A company is an artificial person created by law having separate entity with a perpetual succession. What is perpetual succession? We'll discuss now. And a common seal. What is common seal? This. Common seal. A company's brand is known by its logo. Am I right or not? The moment if I ask you to imagine, about McDonald's, what strikes your mind? That M. If I, ask you to, just close your eyes and imagine about Audi, what symbolizes that ring? Those 5 rings? 4 rings? 4 rings, sorry. Any brand, any other brand, let's say BMW, Benz, any eateries, any other eatery examples? Apple, not Apple. Okay, Apple is okay. Apple brand, okay. Eateries, matlab, khane ka. Okay, Apple also. That Apple symbol, half what you eat. What is that? Apple phone. What else? So there is a unique image that is coming into your mind when I think about the brand. You and I are known by our names. You and I are known by names. So let's suppose I'm Pratik. Am I the only person in this entire country? There's so many Pratik. So how do we differentiate? By signature. Definitely, you cannot say that people have common signatures. So signature would be different. So like that, this company will have a unique signature. So common seal is the signature of the company. Am I clear? So I'm just not going too much in detail because all that I have to repeat here in the characteristics, guys. Whatever you discuss now, no, everything will get repeated in the characteristics. If I don't give you a break for today, is that okay? Okay, so I'll give you a 3 minutes break. We'll come back and continue with the features. And with that, we'll stop for today. So please take a break of 3 minutes. Yes, people, welcome back from the break. So let's continue with the characteristics or the feature of a company. The first feature, guys, incorporation. I've told you what is meaning of incorporation. Incorporation in one single word, it is registration. A company is an artificial person created by the process of law. That is the Companies Act. Very simple point, guys. For a company to born, for a company to be created, registration is mandatory. What is the procedure for registration? That has been laid down in the Companies Act. And we will also be discussing about those procedures one by one in the upcoming classes. So here, very simple. One of the inherent feature of the companies is that it has to be registered, without which you cannot form the company. So when you register a company as per the procedure, that becomes an artificial person having the separate legal entity. So what is the meaning of separate legal entity? A company is an artificial person having a legal entity separate from its shareholders. What is separate legal entity? Sorry? Yeah. Separate legal entity. You cannot attack the private assets of the owners is not governed by the separate legal entity concept. It is being governed by the liability concept, which will be discussed here. So when we
the point of view of entity is different from the point of view of firm.
The perspective with which you account it, that perspective is being defined by the separate legal entity concept. It's, look at the word now, it is separate from its owner. It is a legal entity created by law as per the process of law. Next is artificial person. In the eyes of law, it is an artificial person. It can own property. Now, what is the significance of, why do we say that a company is a person? Because only a person in our country can hold property. A person only can enter into contract. A person only can do the business. That is what our constitution says. So company is not a natural person. So we had to give that status to the company. And to give that status, it is very important that it has the feature of a person. So that's why company is called as an artificial person. So when you're given the status to that particular company, the company can own the property in its name. So if let's suppose the company wants to buy a land. Now the question will come is the property needs to be purchased or registered in whose name? In case of a sole proprietorship concern, very easily in case of owner's name. In partnership also is a separate legal entity. I mean artificial person. It can register in the name of the members, but there it has to be registered in the name of partners. Here, guys, members are huge. And members keep on coming and going. Members will keep on coming and going. So having the property registered in the name of any particular person will be very complicated. Let's suppose Dhiro is the shareholder of this particular company today. Tomorrow he does not want to become a shareholder. He does not want to become a member. He gives his share away to somebody and goes off. So again, I need to transfer the land which is there in his name to another name. So that is a complicated procedure. Because in the company, the owners will keep on coming and going. The members will keep on coming and going. The shareholders will keep on coming and going. And every time the person is, coming and going, I cannot keep on shifting the document name to another person's name. So it is very important that the registration of the land or any assets has to be done in the name of the company. For me to do that registration in the name of the company should enjoy the status of being called as a person. That's why it is being called as an artificial person by law. So because of this status, the company can own the property in its own name. The registration can happen in the name of the company itself. Second, it can enter into contract. If you read the contracts of the companies, it is the language is framed in such a way that the company is entering into, company will have to do this, company will have to do that. Like that, every wording is being done. And finally, the company has its own seal. Being called as artificial person, you are allowed to conduct the business in your name. Sue or be sued for its debt. So company can sue somebody. If I have to get money from somebody, if that fellow does not pay the money, the company can sue. Because the company is an artificial person, I can register a case on behalf or in the name of the company. So company can sue somebody. Or if the company does not make the payment to somebody, it can be sued by somebody else. Since it has got a feature of a person goes through what kind of things, everything a company also can go through. So it can sue or be sued for its debt and action. If company is doing any inappropriate activities, for its action, it can be sued by somebody else. Sued means what? What is the meaning of sue? I'll sue you in court. Which means to take somebody to the court. Yes, boss.
Seal is same as logo.
I'll come to that. The seal will be discussed here. Next is, guys, perpetual existence. A company has a perpetual succession. That is, its existence is not affected by the death of any shareholder, by the lunacy of any shareholder. Lunacy means what? Insane, mental. What else? Lunatic. So if a member becomes lunatic, will that affect the going concern of the company? No. Company will go on and on. Bankruptcy. Just because if some member or shareholder is becoming bankrupt, should that affect the existence or the going concern of the company? No. So here the rule that we follow is members may come and go, but the company will go on forever. This is the dialogue that we follow. Members may come and go, but the company should go on forever.
So who will be in the company?
I'll come to that. Now, the company could be created by anybody, whether the person is alive or dead. Because of that person, the company is not running. The company should run on an autopilot mode. That is how the company is being designed. So here, unlike partnership, we learned that if a person dies, there is an option. Even let's suppose there are 4 partners, one died. Still, there's an option to dissolve the entire business. If you don't want to dissolve the entire business, there has to be a specific clause in the partnership agreement saying that upon the death of a partner, the firm shall continue. Like that, if a clause is mentioned, then you can continue, or else it has to be dissolved. Here, there is no need to maintain that clause. Why? Because by nature, upon the company being created, it will be a company which will enjoy the status of perpetual succession. Which means what? Coming and going of the members will not affect the running of the company.
So if I want more power in the company, so I can invest
No, that is a different topic. Let's not deviate from that. Now, the life of a company comes to an end only by winding up through the process of law. In dissolution, what happens? There are two people. One dies. Automatic dissolution. Yes or no? Here, the dissolution does not happen that way. If there are two, let's suppose person who started the company, in that one died, the company will still go. Within few, time period, within few time limit, if you're not appointing another shareholder, then the company will have to face the penal consequences. Automatic dissolution will not happen. So here the closure of the business will happen only if you comply with the winding up procedure. There's a procedure that you need to follow. Upon following those procedures step by step, only then the company can be closed. Whereas in partnership concern, there are so many reasons. If this is not happened, the firm will be dissolved. If that has not happened, the firm will be dissolved. Like that, ifs and buts are there. One solid example, if I have to give you, two partners, one died, automatic dissolution. But here it is not like that. Time will be given. Within that time, you have to appoint a next shareholder. If you fail to appoint the shareholder within the next period, the company will be penalized. It will not be closed. Am I clear? So here, guys, the company can be closed only by following the winding up procedure. About winding up procedure, you'll be learning in detail in the higher courses like CA, CS, CMA, etc. The life of a company comes to an end. The business will comes to an end only by winding up procedure through process of law. There's a step-by-step procedure given in law. By following that, only company can be wound up. Here, the technical word is winding up. In the partnership, the closure of business was termed as dissolution. So technical name. So in companies, you'll come across a lot of posh words. So many places, if you see, the meaning will be same, but they want to give a classic name to it, to make it feel company, It's all posh language. We don't talk about share of profit. Profit, didn't use the word profit here. The word what we use here? Dividend. If we don't call owners, we call shareholders. Right? So that feeling is different. We want to give the posh feel. Yes, Kush. Penalized means you will be charged penalty. You'll have to pay so much of money. If you don't still appoint within that time frame period, the person also may be jailed. In the companies, the penal consequences are very high. Penal means what? Penalty. If you don't wear helmet and go, what they charge? I'm coming. If you go to, if you drive a two-wheeler without helmet, are you not penalized? You have to pay a fine. So here also fine system is there. In companies act, then and there, if the certain rules are not followed, you have to pay a lot of fines and penalties. And if this continues, even you can be jailed.
Who will be jailed?
The owner, shareholders.
So many owners are there.
The person who's responsible for, that's what I'm telling you guys. This company accounting, company law, what you're looking at now, it's not theory of 4 pages. It is book. In your CA intermediate and CA final level, you have one whole subject for this company law. Are you able to follow? That big. It's as a subject you have to study this. It's that huge. It's that huge. It's humongous. You cannot understand this in one go. Coming to next concept, limited liability. This is a huge concept. I'll just put it very short here. I'll be discussing about limited liability probably next class after that in detail. Here, guys, the liability of the members is limited to the value of the shares subscribed by them. For example, guys, in our example I took, let's suppose Dhiru is wanting 40,000 shares at 10 rupees per share. So how much will he pay? 4 lakhs. Now the company has got an option to ask this entire 10 rupees in one shot. They will tell Dhiru, you have to pay this entire 10 rupees in one shot. He'll pay 4 lakh fully in one shot. Or the company may say that I don't need 4 lakh fully now. From this 10 rupees, you give me 5 rupees now. You give me 2 rupees now, like later, then 3 rupees later per share. So how much Dhiru will give now here? 40,000 into 5. 2 lakh rupees he'll give here. That is, this face value 10 rupees is being collected in installment. Like the fees what you're paying now, installment. Like that, here the 10 rupees is being collected in installment. So first installment 5 rupees per share. So 40,000 share into 5 rupees is how much? 2 lakh. So Dhiru will pay first installment 2 lakh. Then 40,000 into 2 rupees. He'll pay 80,000 next installment. Then 1,20,000 rupees next installment. So if you are a limited company, let's suppose Dhiru is paid only 2 lakh rupees. What is his maximum more liability? Whatever he has agreed to pay, further 80 and 1.2 lakh, that much is the maximum amount that he can pay. Over and above that, he doesn't have to pay a single rupee. In partnership concern, what happens? Dhiru, let's suppose he paid full 4 lakh rupees. If the assets of the firm is not sufficient, if the assets of the firm is not sufficient to pay the liabilities of the firm, Dhiru's private property is attacked, which means from Dhiru's house more money is coming in. Here, Dhiru is not required to pay any single penny more than 4 lakh. So his liability here, since he's paid only 2 lakh, his liability is limited to only the balance amount which he is undertaken to pay. Because he is undertaken to pay full 10 rupees. It is the company who said that give me an installment. So if Dhiru is paid, if the shareholder is paid only one installment, his liability is for the remaining installments only. Over and above that, he doesn't have to pay a single penny. This is what the first point is. Liability of the members is limited to the value of the shares subscribed by them. What is the subscription by Dhiru? Dhiru has subscribed for 4 lakh capital. He subscribed for 40,000 shares. So to the extent of what he has subscribed, that much only he has to pay. Once again. Or amount guaranteed to be paid at the time of winding up. Now Dhiru says that. Dhiru is, let's suppose, one of the founders of the company. Dhiru says that, see, this 4 lakh I'll pay. In addition to that, when we do the closure of the business, or when we do the closure of the company, or when we do the winding up of the company, if there is any shortfall, obviously you cannot come and attack my private properties. But since I am the founder of this company is my baby. So I voluntarily want to pay, let's suppose 3 more lakh at the time of winding up, which means what? Dhiru is giving a guarantee that apart from this 4 lakh, when we close the company, if there is any need of funds, I guarantee to pay you 3 lakh rupees. So this is called as a company limited by guarantee, which means what? Apart from what he is subscribed, he has to pay additionally the amount what is guaranteeing. So what is his total liability? 7 lakh. So limited liability company. Limited liability company means what? Your liability is limited to the capital that you have subscribed. Am I clear? For example, the subscription concept is very much familiar for Netflix. See, Vedant, Netflix means, tell me, sir. All of you know Netflix, Hotstar, Disney Hotstar. So you have to get subscription. So subscription per year.
Yes, sir.
See, look at the energy. Subscription, let's say it says 500 per annum. And you have paid this 500. After 5 months, they tell that pay 500 more rupees. How will you feel? You subscribed 500 rupees per annum. So which means for entire 12 months, they're not supposed to charge single rupee. But they're telling that, no, this later, after 2 months, they're telling that if you want to enjoy for balance months, you have to pay 500 more. How will you feel? You feel cheated. Correct, no? So definitely, if you apply for a subscription, to extent of what you've subscribed, you'll get that benefit. You don't have to pay more than for the subscription price. Since you've subscribed here in Netflix for 500, they'll not charge you more than 500. Same way here. Limited liability company means you'll pay the amount to the extent of what you have subscribed for. Nothing more than that. If a company is limited by guarantee, then subscription value plus guarantee value you have to pay. So Dhiru will pay 4 lakh rupees what is subscribed for plus 3 lakh rupees for the guarantee what is giving. So that is the second company limited by guarantee. Company limited by guarantee, CLBG, company limited by guarantee. Finally is unlimited company. So do you have option for unlimited company? Yes. There is an option that is being given. When you're incorporating the company, when you're registering the company, you have the option. They'll ask you 3 options. Do you want to become a limited liability company? Do you want to become a company limited by guarantee? Or do you want to become an unlimited company? Which donkey will say this? We did not want unlimited liability in partnership. That's why we are coming to company. But this also is there. You can put an option. Which company you want to become? You can opt for unlimited company. In case if you opt for unlimited company, then apart from the shares what you've subscribed, your entire private assets will be exposed to the company debt. So these are the 3 various features of the company under liability. Liability has got 3 features. First feature is what? Limited liability company. Limited liability company. This is one first feature of the company under liability concept. Second is company limited by guarantee. Final is unlimited company. Once again, let's see. One second. Limited liability of its member is limited to the value of the shares subscribed by them. So this is first category. Or amount guaranteed to be paid at the time of winding up in the case of companies limited by guarantee. Company limited by guarantee. So this is the second case. However, in case of companies incorporated with unlimited liability, if you have opted for unlimited option, the liability of the members is unlimited, which means what? Even the private properties will be attacked if the company is not able to pay the business debt. So this is called as an unlimited liability company. So this is the third category. I'll be discussing about this in detail in the day after tomorrow's session. I mean, the third class of the chapter. Yes. Dividend has got nothing to do with this. On this, you mean to say on this 4 lakh rupees, 3 lakh rupees, we get dividend? No. You are the holder of shares only to the extent of this 4 lakh rupees.
Profits are
Yeah. So here, let's suppose Dhiru is paying 7 lakh rupees. So dividend, when I calculate the percentage, you know, that 15% we calculated, no? For this, we'll take only the subscription amount into consideration. See, this 3 lakh rupees is a guarantee that is being given by Dhiru. He's not giving that money. Dhiru says that upon winding up, if you need money, I'll pay you money. So Dhiru is not paying this money at all. The company is not enjoying this money at all. Then why will company give profit for you, dividend for you? So this is a commitment that guarantee, you know, the shareholder is additionally giving out of love and affection towards the company. In return, you cannot expect anything. Am I clear? Honest people, am I clear? Hello?
Yes, sir.
Yes, sir.
Now, transferability of shares. Shares of a company are freely transferable in case of a company listed on stock exchange. All of you know share market? All of you know share market?
Yes.
How many of you trade in the share market here? Raise your hands. Vedant? Anybody else?
So what, sir?
How many of you do the trading in the share market? Okay, Amrit.
So
Nehal.
not trading but investments.
Of course. She understands the difference between trading and investment. Huh? Good.
So because we are going to school, so we cannot do this.
Oh, wow. Okay. So Amrit, Neharika, Abdul, Avantika. Yes. Okay. So can you share your experience? How do you do your trading or investing? So there's something called as a demat account. It's
Yes,
like
sir.
an account that you need to open, where you know all the companies which are having public shares, the shares to be exchanged in the public forum. That has all been listed. So you can go there if you want to buy shares. You can tell that I want this much quantity of share. This is the price. If opposite person is willing to sell it, he will sell it. The moment he sells, he press sell button and you press buy button, you'll get the share. So which means what? The share has been transferred from one person to another person. So all the shares that has been listed on the stock exchange. So in the next class, we'll be discussing about private company, public company, OPC. So only public companies share can be listed on stock exchange. Stock exchange is a platform where the companies will list down their shares, which can be traded. So share is now here like a product. I can buy it at one rate. Let's suppose I'm buying today one share at 50 rupees. Tomorrow this becomes 60 rupees. So I'll share it for 60 rupees. My profit is 10 rupees per share. So this is my buy price. This is my selling price. The person to whom I am selling, the 60 rupees, that will be his buying price. So this is being traded. The shares are being traded on the stock exchange like a product. So the shares of the company are freely transferable. So which means what? Vedant was earlier having one share. I purchased from him. So Vedant has transferred his share to my name. So shares of a company are freely transferable in case of the company listed in a stock exchange. Which companies can have their shares listed on stock exchange? Only public company. Now with the technology what we have, guys, just a button is enough to transfer the shares. In those days, if I have to transfer shares from one person to another person, huge procedure, list of procedure, steps that you follow. But today, everything on a single click of a button can be transferred. That's why we say that it is freely transferable, easily transferable with a click of a button. But in case of an unlisted company, unlisted public company, if it is listed, becomes a listed public company. Listed means what? Listed on stock exchange, National Stock Exchange, Bombay Stock Exchange. All of you know that. I'll be discussing about stock exchange in detail in the upcoming classes. So there's unlisted company, public company, unlisted, and private companies. You can transfer, but transferring is not that easy. You need to follow the rules and regulations that has been mentioned under Articles of Association. In short, we call it as AOA. What is AOA? I'll discuss in detail in the upcoming classes. In short, if I have to tell you, I'm a company. I have to follow the rules and regulations. That is, if I want to operate a company in our country, what does the country do? Companies Act 2013. So anybody is registering in India has to follow the rule 2013, Companies Act 2013 in India. So this is the rule book that is designed at the India level. the rule book that is designed at the India level, national level, is called as a Companies Act 2013. Now, each company will have their own rules and regulations. Now, their rules and regulations is mentioned under AOA. So, an article of association will contain the list of items that a company should follow internally, which will be governing the regulations of their company. So, in AOA, articles of association is a document where there will be one particular point that what should be the procedure for transferring the shares. They'll mention the procedure. This form has to be filled. This form, after filling, has to be submitted to so and so person. After submitting, the old certificate has to be cancelled, and in place of the new certificate has to be given. Like that, the complete step will be mentioned. That is called as a article of association. So, in case of unlisted company and private companies, you can transfer. Transfer is slightly difficult because you have to follow AOA. Am I clear or not clear? You have to follow the rules and regulations. But for a company which is listed, for transferring shares with a click of a button today is being transferred. That easy it is. You can buy easily, you can sell easily. Am I clear or not clear? Online people, how many of you are awake? How many of you slept? How many of you listening, not listening? If you can tell me.
Awake, sir.
Listening, sir.
Awake, sir.
Listening, sir.
Super. Next is management and ownership. A company is not managed by all the members, but by their elected representatives called as directors. Tell me, guys. All of you have heard of this company called as Reliance Limited? Who's the owner? Who's the MD?
Ambani.
Mr. Mukesh Ambani, sir. I mean, of course, now, yeah, now the next generation is coming in. Akash Ambani, Anand Ambani. Are they only the shareholders of the entire company? Are they only the owners of the entire company? Even so many people like us, we have invested capital in their company. So we are also the shareholders. Like that, lakhs of shareholders they have. In sole proprietorship concern, the person who is investing the capital, he manages the business. Yes or no? In the sole proprietorship concern, the person who invests the money manages business. In partnership concern, the partner who invests the money manages the business. But in company, there are lakhs and lakhs of investors. If we allow the entire bunch of people to sit and do the management of the company, what will happen to the company? Can you effectively run? When there are two people, there is a conflict. Who is right? Are you right or am I right? 3 people, even more headache. 10 people, even more headache. When will we take decision? We don't know. By the time we discuss, agree and make a decision, everything will go off. Things will slip away. In business, you have to take decisions like this. So 1 lakh shareholders, let's suppose, you have to go. So, and 1 lakh shareholders are scattered in different parts of the country, boss. If I call him, he is not available. If I call him, he is not available. Like that, when will all these 1 lakh people come together? When will we discuss the point? When will we decide and take the decision? By the time the contract, let's suppose there's a contract that you have to enter into, that contract will go to somebody else. So it is not practically possible in the companies for the investors to make the decision or manage the company. So what that is what the shareholders will do is they will elect their representatives who are called as directors. A company is not managed by all members. It is not managed by all the shareholders, but they select certain people who on their behalf feels that they can run the company in an effective or efficient way. The person who is running the company is called as a director. He is giving the directions to everybody. Do this, do that, do this, do that. Don't think director means movie director. This is the company director. Thus, management and ownership are separate. So here, management is different, ownership has to be different, or else if it is mixed up, it is very difficult. Now, managing director or few directors could be a person who would have invested money in the company. So he's called as a shareholder. Let's say he's the management. But there are certain directors in the business who are managing the business but are not necessarily the shareholders. Some person may have superb capacity. He knows how to direct the company. Let's suppose we have a CFO who is like 30 years of experience, superb, amazing experience. So we say that you come and lead the company, but he's not willing to invest the money in our company. So can we compel him? No, if you want to become a if you want to become a director or a management person, you have to buy the shares. Can we compel him? No. That is his will whether he has to invest or not. So if he's investing, then he'll become a shareholder. If he's not investing, he'll just become a management. So MD is a person normally, guys, is an investor as well as the management person. So he's both shareholder as well as member. But every director is not necessarily the shareholder. If he's investing in the company, only he's a shareholder. If he's not investing in company, he's just only running the company, then he's called as a management. And every shareholder cannot be the management. He can just be the owner. Let's suppose I have shares of Reliance Limited. I am a shareholder, but I'm not in management. So I cannot manage the business. I only have invested the money. So it is not necessary that every director, any person who is appointed as a director, it is not necessary that he is always a member. It is at his option whether he wants to become a member or not. If he wants to become a member, then invest the money in the business. If not, just become a director and manage the business. That's it. So guys, management is different, ownership is different. Management is the person who is managing the business. So management is known by the roles and responsibilities what is allocated to him. Whereas ownership is a title that is being given to you if you are investing in a company. So ownership means investing. Management means taking care of the business. So both are separate. Both are not same. Yes, boss.
So the director gets salary.
Of course. So here in this case, the director is not a member. He's just managing. So what will he get? Salary. Here, what will he get? MD. He'll get profits plus salary. He's managing now. On behalf of all of you, he's managing. For doing extra work, he'll get salary. Plus, he'll get share of profit. Share of profit here, it is called as dividend. We don't use the word. I told you, we are posh people. We don't want any casual words. We want everything to be, stylish way of communicating. So we don't call it a share of profit. Profit, dividend, we call it as. It's, dividend. So this is about management and ownership. Any difficulties here, please? Any difficulties here?
Boss.
No, sir.
Finally, guys, common seal. A company may or may not have a common seal. It is not compulsory, but it is advisable to have it. Here they're telling may or may not. No? If you go in reality, you'll be forced in some way or the other to have a company common seal. You'll be forced. So if you see, every company has to be a common seal. The common seal is the identification of the company. If I have to identify a company uniquely, so this will have a unique identification. So common seal is the unique identity of the company. Like the brand I said, McDonald's ka brand, Audi, BMW ka brand. Like that here, we are not talking about logo here. Logo is different, common seal is different. Common seal here means signature. If you remember, I showed you the share certificate. No? Here in the share certificate, can you see this? Blue color thing. That is the common seal of the company. Today, the common seal has been evolved in different. Today, the seal is coming in embossed form. If I get a chance, I'll just show you this embossed. You can see your embossed form. There's some embossing here. Can you see this part? This embossing of that, like print in that embossing. If you closely observe, you'll see the company's name in that. So this is called as a common seal. Are you able to follow this? If it has a common seal, it has to be affixed on all important documents. If a company's got a common seal, every document that the company is entering, so every the document the company is preparing, every contract the company is entering into, and on every document this common seal has to be mandatorily there. The common seal is not incorporated on the document, that document is called as invalid. Am I clear or not clear?
Clear.
It is basically a signature. If I want to open a bank account in my name, I fill all the form. In that form, I put my signature. Because I am opening the bank account in my name. If you have to open the bank account in the name of the company, then company has to sign it. Company has to have its seal. It cannot come and sign the way we sign. No? So for that, we create a seal, which will give its unique identity. That is common seal.
We cancel all the,
Sorry?
to buy something. In the name of company.
To buy something in the company's name. For example, if you have to buy land, do we need to get permission of all people? That will depend on your articles of association. I told you the internal route. It's huge. I'm telling you, companies is huge. What to do, what not to do, who to consult, who not to consult. Now you may ask a question. Sir, if management ownership is different, you're telling that shareholder only invests the money. He does not make any decision. Then what is the point? See, it is not that the shareholder is not given the opportunity to make the decision. The shareholder is got the right to make the decisions, but the decisions what is allowed to make is limited. He cannot participate on the day-to-day management. Please understand, as a shareholder, I cannot participate into day-to-day management of the company. But once in a year, I have the right to go to the company in the company's annual general meeting. In the annual general meeting, there are certain decisions which the company cannot take without shareholders' permission. The dividend, what has to be given, has to be approved by the shareholders. Which auditor we have to appoint, that has to be approved by the shareholders. So like that, there are few things where the power is given in the hands of shareholders, but majoritarily the decision is taken by the management, and management is elected by the shareholders. Am I clear or not clear? I wanted to actually even complete this two differences also, but we started late, so because of which we are not able to complete it. Never mind, we'll complete it in the next class. So next class, my pace will be comparatively a little bit faster. I just wanted to give you a perspective, so the flow was a little bit slow. But next class onwards, the flow will be faster. So online people, are you all comfortable with this speed?
Yes, sir.
Pace by next class?
Yes.
Everybody?
Yes, sir.
Yes, sir.
Excellent, excellent. So yes, our next class will not be on coming Wednesday because we have Vinayak Chaturthi coming on Wednesday. So we'll be having an off on Wednesday. So our next live class will be on Friday. So my sincere request to everyone is please be here in class by 6:30. 6:30 sharp we'll start it. Why? Because we have a lot to complete and the time limited is left is very limited. So 6:30 sharp, 2 hours, 6:30 8:30 we'll study with a gap of 10 minutes. So I want a proper recording of 1 hour 50 minutes. So please be on time, guys. Next class, I'm telling you, make them what I will start 6:30 sharp with whoever is available. So please be on time so that we can complete this by mid of September, right? Not mid of September, sorry, mid of end of September. By end of September, we should try and complete this. If not by at least first week of October, we have to complete this chapter. So this cannot happen without your support. No, only issue of share capital talking about. Okay. So with that, I put an end to today's session, guys. I'll see you all in the next class on Friday from 6:30 to 8:30. Until then, bye bye. See you. Take care.
Thank you, sir.
Thank you.